I made over $100,000 in total profits from prop firms during the month of November using this 6-step strategy, which I call the capital vault method. Let me teach you guys exactly how simple it is to use this strategy that's actually based on data and orders, not leaving anything to chance. Let's hop straight into it and I'll show you guys exactly how I did this so you can do it as well. But before we get into this, let me just show you my month, right? This was November. Of course, not everything is a perfect day. As you guys see, my win rate is just above 50%. We have days with 33% win rate. We have days where we have a 100% win rate, meaning one trade. We have losing days, of course. We try to keep those small. We have days with a 50% win rate and whatnot. But these are just some of the payouts. Again, November 27, 26, 22nd, FFN, Take Profit Trader. But again, one thing is me doing it myself. The other thing is actual other people being able to do it. And again, this is just proof that the system works. Look at Brendan. He was able to make over $30,000 in a single week. Josh got his payouts. And then we had Bernardo, who was able to make just around $60,000 from a single prop firm. So the first part of this strategy consists of understanding the trend. I usually look at the 4-hour and I look at the 1-hour. And what I do is I ask myself, are we creating highs or are we creating lows? And are the bulls or the bears pushing the market? And I'll just use today, Wednesday, December 4th, as an example. On the 4-hour time frame, we can see over here that price just kept rallying bullish. Again, we were nearing all-time highs. That's nothing to be worried about. But I just saw that price kept going higher. And then if I go on the 1-hour time frame, I'm just seeing the price keeps going higher and higher. Now, again, this is around 6 a.m. Let me go over to 9 a.m. You can see, yes, price did go lower in this candle, but overall, this is what matters, right? We're going higher, we're going higher, we're going higher. Yes, we have some orders here. Yes, it's going down. But at the end of the day, the overall order flow is bullish, and that's what you need to focus on. At least that's what I focus on. Not if a single candle is going down or whatnot. The overall order flow for the day is bullish, right? And again, on days like this, there's no real order flow, therefore there's no good trade. On days where we're going down like this, there's absolutely bearish order flow, which can get overpowered right after. So that's why you need to understand the context, right? We priced in the low, went higher, priced in the low, went higher. So for today at least is, hey, we're going higher. We've been going higher. We're in a bullish trend. So I expect price to continue doing what it's doing. And that's how I find my trend on the higher time frame. Now, this is probably the most important part of the current strategy that I'm trading, which made me the 6 figures in November. And it is my bookmap liquidity levels. It is where did we last activate any major orders and where do we have resting limit orders. What I'll do with these red hot levels is I'll wait for price to react at these levels. And after seeing how price behaves at set levels, I will formulate my trade idea, right? I'll show you here in the bookmap kind of how it looks. Now, we can see here on bookmap that this is around 9:30 a.m. And I see that we had this red hot level down here and this red hot level down here. As we tapped in, we went higher. So that was my first indication we could have gone bullish. I did get faked out on this first trade for this day. Then going lower, right, we saw more red hot liquidity levels line up. We saw more red hot liquidity levels line up. So what I do is I wait for a reaction at these levels. What I usually do is once price gets to said level, right, maybe this level right here, what I'll do is, hey, it reached this level. If it bounces and my overall trend is bullish and the overall order flow is bullish, I'll be looking to take buys, which I'll explain in a bit. But hey, if it doesn't bounce and I'm seeing the price actually, breaks under and closes under, I'll wait for the market to give me more data. And I have two options. I'll either wait for the overall context to turn bearish and catch a sell, or simply there's no trade. You don't always have to force a trade. I'll only take a trade in the highest probabilities. So what I'll do is I'll wait for price to bounce and then go higher. This is really important though. I need these levels to be at a higher time frame key level. Again, I'll talk about key levels in a bit, but these can be either the liquidity or imbalances on the higher time frame. At least in this case, again, I'll use the liquidity. It taps in, goes higher, and I'm going to explain exactly how I find my entries after using these key levels. Now, the most important thing, right, I just talked about the bookmap levels, but structure, right? First of all, is price respecting structure. What I mean by price respecting structure is if we're bullish, is price creating new highs while respecting lows? And if we're bearish, is price creating new lows while respecting old highs? This is amongst all time frames. Now, again, did we recently create highs or lows? That's for the trend. That's kind of to find where price is going. I want to see momentum, creating new highs or creating new lows. Does it align with the key levels? Again, what I just said, right? So if on structure we're bullish and price drops down, I want price to drop down to a key level so that then from there it can turn bullish. Or if we're bearish, I want price to drop down, then come up to a key level so it can drop and continue being bearish. Now, the most important question that I ask myself when looking at structure is, when would this be invalid, right? If structure is currently bullish and it looks like this, then when does structure become invalid, right? If it breaks what low or what high will structure become invalid? Usually, I'll grab the most recent swing low or the most recent swing high. And if that gets broken against me, that's kind of when it becomes invalid. So if I'm bullish and we break under a key low and we start trading below it, that makes it invalid for me. And if I'm bullish and we break above a key high, right, a swing high, and we trade above it, that's an indication for me that, hey, if we're bearish and price is now trading above highs, maybe my idea was not right initially. And just to give you guys an idea, again, using the same example for the day, market was around here at 9, and we had these two key levels to the downside. We had a key level at 407 and at 397. So, actually, no, it was a bit lower. It was around here. But I'll wait for price to drop down into these levels and then get a reaction. Again, if my structure is bullish, right? Again, basic bullish structure goes higher, goes lower, it goes higher, it goes lower, it goes higher, nothing too crazy. I want price to drop down into here, find a key level around this area, and then catch a continuation higher. And again, first I'll target this high and then I'll target more key levels. What I did over here is pretty obvious, right? We were bullish. I see price going bullish. It dropped down into two key levels. And then after rejecting, right, not as soon as it taps a key level, not when I feel like it's going to reject, after price tells me that it's willing to reject at those key levels, I will take a trade targeting even more key levels, right, targeting the key levels to the upside, because on heat map, you're going to see levels all around the place. So that's why it's so important to build the proper context, because if you have the trend right and you're building the context accordingly, all you simply need to do is wait for price to react at said key levels and then just target kind of the next orders or the next levels that are pending to be targeted. Now on the lower time frame, right, I'll use the 5, the 15, and the 3 to use my structure is A, does it correlate to a higher time frame narrative? Because if we're bearish on the lower time frame and I'm bullish on the higher time frame, then there's no correlation between time frames, and that means that there's no real trade for me yet. I need to wait for the lower time frame to be correlating to the higher time frame to then spot my trades. And I ask myself, when would it be valid? Well, if we're bearish on the lower time frame and bullish on the higher, okay, it would become valid after it takes a high, creates a low, and then breaks that same high. And I'll give you the example just right about now. And then when would it be invalid? Hey, if we're currently bullish, but if we break under this low, then I'm not bullish anymore. So again, coming back to the same example using structure, we go higher, right? We go lower. Boom, we price in, we go higher, we go lower. However, right, we're bearish, but on the higher time frame, I'm bullish. It reacts at my key levels initially, right? It reaches this key level. It goes higher, breaks this high, comes back lower, fails to break this low, and then goes higher again. So after it breaks this high, this is the best opportunity. Why? Because not only did we create a new high and fail to take a low, but we also created a new high after. And then I'm going to talk about my entry soon. But again, it bounces at the key levels. So after it rejects at my key levels, I can see it one time here. Again, but here structure is not fully confirmed because yes, we created a high, but we haven't confirmed this high. It could just create this high and then dump. After it fails to take out a low and creates a new high, that's when my structure is confirmed, and that's when I start looking for my trade entries, which is what I'm going to talk about now. So before even taking the entry, I need to look at certain things. A, were gaps recently created, gaps I mean imbalances or fair value gaps or inverse fair value gaps. Why? Because if I see that price is creating gaps in my favor, I know that momentum is with me. That is the most important thing, right? I want to have momentum on my side because I want to go into profit quick on my positions so I can be effective with my trade management. Now, and also was structurally recently broken. If I'm bullish, did we recently create a high? If I'm bearish, did we recently create a low? And the most important thing is I like to buy when price is going up, even on the 1 minute or the 3 minute, right? If I'm waiting for a retracement to the gap, I would rather wait for the price to tap into the gap, bounce and go higher to confirm to me that it's actually willing to reject and it's not just going to eat up that zone and go higher. Or if we're selling, instead of, buying as it's going up, wait for price to stop going up. And then once it's going down again, that's when I'll be able to take my sell. So let me show you guys exactly how that would work. But first, the most important thing, I also need a book map confirmation, which I'm going to talk about right after we go over the end. So again, just right before we go over book map, this is my bread and butter, the 1 minute time frame. And again, just to confirm, right, we price in a new high, same thing over here. Price in a new high, bada bing, bada boom, fail to take the low, and then start going higher. Now, when we come back to these areas, that's kind of when you can follow through, right? That's sort of, I want to be taking my entries when it goes down. However, we had a major death candle here, which wasn't the best of confidence for me, right? Again, I I could take the entry here as soon as I start seeing bullishness after it fails to take the low. But for extra confirmation, sometimes I just like to wait until the high is broken, get me structure and whatnot. So instead of just entering as soon as it taps this area, right? Let's say that I was using this imbalance for my entry confirmation, right? It had been tapped into. I don't care much if it gets closed under. Again, I'm looking at the overall structure. I saw that on Bookmap, we had some key levels light up around here. Boom. So what I do is, hey, instead of catching a falling knife, I'm going to wait for price to confirm to me that it's actually willing to go bullish. So in this scenario, right, if it's willing to go bullish after this candle, right, after here, what I'll do is I'll take my entry here. And since I know that this level already respected, I can have a shorter stop and I can target my key level around this area. Now, something I could also do is, again, if you want the anticipated entry, hey, we failed to take this low. We had a lot of liquidity come in here at Bookmap, and that's why I'm going to talk about my Bookmap confirmations real soon, but I saw there was a lot of activity on here, and we started going higher. As soon as I see this rejection and I see that price starts going higher, right, once we get a close above a previous zone, in this case, we had this major candle to the downside. Once price closes above here, I consider that the trade is good to go. I'll place my stop, again, maybe at the end of the range. Sometimes I like it a bit tighter. And then just continue this to the upside. So these are two entry possibilities that I would have within this same trade idea. Now, as for the Bookmap, about these specific 3 confirmations, I'm going to talk fully about them in another video that's coming this week as well. And it's mainly, do we have icebergs or stops? In the bottom of Bookmap, I get a map that shows me the icebergs, which are major orders, and the stops. If stops are going to one side, I want icebergs to go against it, right? Because if a lot of stop orders come into the market, let's say a lot of sell stop orders, that means that buy orders are coming into the market. Because again, the sell stop orders, when you're buying, you put your sell stop under the lows. As soon as they're triggered, we get buyers to come in. So if I can just get icebergs in sync with it, then it tells me that, hey, we're actually bullish. Or if I'm seeing a stop run to the downside and I'm to the upside and I'm seeing a lot of buy pressure come in, I just want some icebergs to eat those orders up and send it back down. In this example, we had a stop run to the downside that was happening, which I'm going to show real soon. Again, it was right around here, right? We had price came down and it took out all these stops, and then we had an iceberg come in here. So after all these stops, right, the chart that was on there, it's showing that, hey, the stop run to the downside is happening. And I immediately saw an iceberg come in around here at this price level, tell me, hey, I'm willing to buy all these orders coming in to push price higher. Now, do we have absorption? What absorption means is if we're seeing a lot of sellers come into the market, but price is not pushing lower, that means that somebody's buying all those sells. Or if we're seeing a lot of buyers come into the market with the big green bubbles, but nobody's actually willing, but price is not pushing higher, that means that somebody's selling it. So for example, over here, as you guys saw in the Bookmap example, right around 940, we saw that, hey, we had a massive big red bubble all the way down here. However, price did not go lower. Price stopped at this area and immediately rallied higher. What does this tell me? This tells me that price is actually being absorbed. The sellers are being absorbed by the buyers, and price is going to push higher. And then lastly, did we get new key levels that support our idea? Kind of what happened over here, right? We went higher, boom, broke higher. And then as we tested in this area, we hit a key level that lit up around here, just to confirm the price was actually supporting at this level, that, you know, this level was willing to be respected. Now, this doesn't always need to happen. I just need to have one of these 3 to confirm my idea. I don't need to have the 3, but the more, the merrier, right? I just need one of the 3, and as long as I see one of them, I'm good to take my entry. Now, as for my trade management, there's several ways in which I'll do it, but this is the general rule of thumb, right? If I'm gonna take partials, I will take maximum 30% of my position off. So if I'm in with 3 contracts, I'll take off 1 contract. If I'm in with 6 contracts, I'll take off 2 contracts. And I need to take it out at a minimum 1 to 2. And I'll take it as long as the liquidity level gets hit, right? So red hot liquidity. If structure is not continuing, or if we fail to, let's say I'm bullish, right? And if we fail to take a high multiple times and start going lower, that's when I'll consider exiting a partial there. And then I see the Bookmap is versus my trade, right? Let's say that I was bearish, and I see massive red bubbles come in, but I'm not seeing price go lower. I'm seeing that the sellers are getting absorbed, and then I'm seeing that we're having key levels support the price to go higher, and I'm bearish. That's not a trade I want to be in. What I'll do is I'll put my stop loss to break even after taking the partial, or trail it to the nearest structure point, which is in profit. That's probably the most important part, in profit. Now, my risk strategy, it really depends on what I'm trading. If I'm trading a challenge account, I'll risk 1% per trade. I'll scale in with an extra 20 to 30% after structure is confirmed. So if I get in a trade, right, in a buy, and I create a new high, price in the low, and then break above that high, I'll add another contract maybe if like once we break the high, and I won't take partials on challenges. I want to get through them quick. And my rules for losses on challenges are max 2 losses in a day. If the first trade is a win, I'm done for the day. And as for my funded and personal account, on the funded account, I will risk 0.25%. And the management of the trade really depends on the trade that I'm taking. 3 trades maximum, of course. But the management really depends on how I see the trade. And as for my personal account, I'll risk on a dollar amount. I usually like to risk anywhere between $4,000 and $5,000 per trade. Again, I'm not going to be, I'm not going to risk 500 on this idea to test it out. No, if you're going to risk on your trade, make sure it's a trade that's good enough to go in with your full risk. And that's pretty much the approach that I have for this strategy, guys. Again, the most important thing is to understand that there's losses. The losses are going to come. As I said, I have a win rate just above 50%. But if your risk management is dialed in, and again, with these trades with Bookmap, you're able to get at least a 2-to-1, 3-to-1, 4-to-1. I've even seen a 7-to-1 risk reward ratio. Again, not all the time, but they happen. And it just really allows you to, if you manage your risk, get some really big profits. So let me know in the comments, guys, if you like this video. Next up is going to be the series on Bookmap. It's going to be here on YouTube. Excited to share that. Adios.